Let's talk appraisal contingencies. So a contingency is something that we have in the contract that is meant to protect the buyer from things that can go wrong during the purchase of a home. The appraisal contingency protects against a low appraisal. So an appraisal, as mentioned in previous videos, is a third-party opinion of value of the property. The bank hires the appraiser to determine if the price that the buyer and seller have agreed upon for the sale of the property actually is a good value. Does it make sense? Does the appraiser agree with them that the house is worth X? If the appraiser comes back and says that he does not agree with the value, it might come in higher, which is awesome. That means the buyer has immediate equity, but it could come in lower. So say the house we're purchasing it for $500,000. The appraiser comes back and says it's only worth $480,000. Now the bank is only going to loan the buyer enough to buy it for $480,000. So it would be their down payment plus whatever's left equals $480,000. Well, you've already agreed to pay $500,000. So what do we do now? The appraisal contingency is in place to protect you from this scenario. The first thing you're going to do is ask the seller to lower the price to the appraised value. If they won't do that, you can try and negotiate some in-between value. Maybe the buyer pays half, the seller pays half, something like that. So you end up at $490. Or, and what we often see in really, really strong sellers markets, is that the seller will expect the buyer to just pay the difference. And many buyers are willing to do this because they know that the value of the property is going to go up so quickly that even if they overpay now, the value is going to catch up in just a couple months and they're going to own the house for years, so it doesn't even matter. So some buyers, if they have the funds, will actually just pay that extra $20,000 in cash at closing. Maybe they have to lower their down payment if they'll still qualify, or maybe they just have additional cash, whatever, and then the sale closes. If the buyer just can't do that and the seller won't lower the price, the appraisal contingency protects the buyer so the buyer can back out of the contract and take their earnest money or deposit money with them. So that is what the appraisal contingency does. In strong sellers markets like we're experiencing right now as I'm filming this into 2022, many sellers are expecting the buyer to waive the appraisal contingency, which means they don't have that protection. In that case, what we are doing with our buyers is making sure that we have a really strong lender who can get the appraisal back very quickly, and we get that appraisal done during the inspection period. Now, as long as you get it done during the inspection period, if it comes back really low and you as the buyer have waived your protection and you now have to either pay the difference or back out of the contract, that inspection period would give you another chance to back out of the contract and take your earnest or deposit money with you. So that is one way around that. That way you can waive that appraisal contingency. It looks good to the seller. They feel like they have one less contingency to worry about, and you can actually get the house. So appraisal contingency is super important. We definitely like to keep them in place if we can. In crazy seller markets, sometimes we will waive them, but we're always trying to keep some sort of protection still in place for the buyer as best we can. What questions do you have about this? Comment below. Let me know your experience if you've had to do this while you've been buying a house, and I will talk to you later.